Hey, good morning. It's Mike Zschunke at Berkshire Hathaway Homes and Shift One Properties in Scottsdale, Arizona. Friday morning market chat. We're going to touch on residential. We're going to talk about the commercial market a little bit. We're going to talk about the economy. And then I have a question at the end for you. If you could help me out a little bit, that'd be great. Or fast forward. Anyway, I'll start with inventory. Inventory down again. Down 12 of the last 13 weeks. In the multiple listing service, Maricopa County and Scottsdale. We're back to the same number, 1,220 single-family detached homes. Same number that we had on January 10th of this year. So we had this inventory building up. We had some good inventory through the spring. And now a lot of those are expiring, canceled, as you see. And I think sellers just were priced too high and didn't sell. I'm seeing some deals now. I'm definitely seeing some deals now. But, we're having this change. I talked to a lot of other agents, a lot of other brokers. There's this change happening in this market now. We were at a balance. We were at a seller's market, then we were at a balanced market, and then a buyer's market we dipped into a little bit. And now we're just kind of turning up again, back up to a more balanced market. And that's, we are seeing, hang on a second. Sorry about that. I got a Zoom meeting going on too. But I'll check that out later. But we're seeing, normally a lot of times people wait till the fall. They say if you're in Scottsdale, Phoenix area, wait till the fall to list your home because you'll have more traffic. Well, this week, talking to other brokers and agents, it's like everybody came back early for this year. I'm getting a lot of calls. We got a property under contract this week. It was exciting. I'll mention that. A good week of negotiations. A lot of fun. My favorite part, and I think I'm good at it. Nobody called me names, so that was good. I don't think I made any friends, but we'll talk about that in a minute. Negotiations are fun. But anyway, there's this activity. There's houses are coming on the market under contract. I always say we can look at houses that have canceled. They're going to come back in the fall. And so let's make a deal now. And there's this energy. I talked to another friend of mine yesterday, and she had a listing up the northeast corner of 101. She said she had a ton of traffic come through her property. So it's getting there. You feel this energy coming. So prices are fairly stable. And when you're in a buyer's market, well, we've only had 4 or 5 buyer's market over the past 21 years. Prices in a buyer's market typically dip 2 to 5%. Again, like I said last week, if that's going to hurt you on $1 million home, $50,000, you shouldn't be buying a home. But you want to buy right there. Now is where your negotiating power is as a buyer. And as a seller, the traffic is there. People are out there looking. People are, watching the market. They're ready to come on. They're not afraid to put offers in, and it is what it is. But there's more homes right now, currently, or for July, I guess, under contract. The end of July, beginning of August, under contract than there were last year. So everybody likes to paint the doom and gloom, but Paradise Valley is back into a seller's market, not because so much demand has increased. But supply in Paradise Valley is as low as it's been since July of 2006. So, and that kind of is around the area, Scottsdale, Cave Creek. And I always said the core parts of the Phoenix Metro area, they hold their value. They're the last to drop in value, and they're the first to come back. So we're starting to see that happen. The Cave Creek, even Mesa. Mesa's getting some big numbers now. It's surprising me. There's some nice properties down there, especially out by Apache Junction. It's beautiful out there. So anyway, we work all over the valley. We kind of go where we have to go. I saw a headline yesterday, foreclosures people are still talking about, up 274% compared to last year. Well, last year in the Phoenix metropolitan or the greater Phoenix area, there were 35 foreclosure sales in the month of July. This July, there was 131. So you've got, I don't know how many households, 44,000 in Scottsdale. So the greater Phoenix area, 5,000 population, or 5 million population, 131 foreclosure sales. They may be up 274%, but 274% from zero is still zero. So if you hear somebody promoting that, they're just looking for clicks and likes, like I always say. And that's just noise. Anyway, we had some good negotiations this week. I'm going to there's three parts to negotiating. Purchase price, and then you got 10 days, you got the inspection period, and then you have the appraisal. I'm starting to hear about a lot of appraisal negotiations. People are not afraid. Like I said, people are not afraid to put offers and not afraid to buy houses. Banks aren't so excited about lending on property right now. Their funds tighten up. Bank lending tightens up. So the appraisals become very important. Like today, I have to really work on this appraisal, prove the value of this one we got under contract this week. But again, negotiations, I love the negotiation. It's a little different than it used to be. I'm an old school, pick up the phone, let's hash it out. Let's meet, nose to nose, toes to toes. Let's talk. Let's figure out where you need to be and where I be. And I don't see negotiations as a win or lose. It's what do we got to do? My seller has a seller to sell. Your buyer wants to buy that asset. What works for everybody? Is there a Porsche in the garage? Does that part of the deal? Everything's negotiable, you know. Nobody wants your grandma's Ethan Allen furniture, by the way. So, furniture. I'm not a furniture salesman, so and it's not worth what you think it is anyway. But let's negotiate on the house. What's it worth to you as a seller? What's it worth to you as a buyer? There's always a solution. And this one, we were pretty close. You know, working with another agent on the other side, and he didn't like to pick up his phone. He wanted to text and email. So we went through 6 days of negotiations because he was afraid to pick up the phone. So anyway, that's my rant right there about negotiating. So anyway, you know, that's really where how do I toot my own horn? That's where I tend to shine, is in the negotiations. Actually, a good friend of mine, Peter, Homes for Car Guys, he and I we butted heads negotiating years ago on a property, and now we're best of friends, good buddy. So, you know, it's not a win or lose. It's how do we get our clients, everybody to the closing table, get everybody on to move on and where they want to go. That's my job. So anyway, I love the negotiation part. Commercial. Had a good meeting this week with a title friend of mine. He does commercial title, talking about how we can promote the own your practice, own your business, own your small business real estate. And it's really a no-brainer with this 100% depreciation. We're going to start doing some classes over at the new Berkshire office, hopefully, just how the benefits of owning your real estate works. So, and again, in commercial, you know, he's seeing a lot of deals. We're seeing too. A lot of deals fall out of contract, and it's usually financing. Like I said a little bit ago on the residential side, lenders are very hesitant to lend. You know, they may offer you, say, we'll give you a great rate, a 6% rate, but is that rate available? That rate is not free. That's going to cost you some sort of spread or something. So there's deals out there. Lenders are hesitant. Private money is out there, but they don't want to take any risk either. And it really goes back to 2022, 2023. There's something called syndicators. A lot of people took their weekend class and they raise funds and they buy a multifamily building or a small strip mall, and they promised big returns to the investors. Those investors got burned as interest rates came up. You know, we've had years of free money, which again, I'm going to talk about in a minute too. But anyway, light industrial, always a winner, always a winner. And there's a lot of small mom and pop strip malls out there. Talking to somebody the other day, you know, the 65, 75-year-old people, they're tired. They don't understand communicating by text and email. They want to do face-to-face, pick up the phone. They're tired of just the way the business world works these days. So they're selling their properties. They just don't want to do it anymore. So there's some deals out there, and a lot of times they'll even hold a note for you. So there's a lot of good deals out there. I think with the syndicators, a lot of that's going to be coming up to the market soon. So commercial's hot. Commercial's going to be real hot, and this 100% bonus depreciation. I know I say that every week. If you're a dentist, doctor, lawyer, insurance, small business owner, own the real estate, please. It's give me a call and we'll talk about it deeper, but it's a no-brainer. 100% tax depreciable. Anyway, economy. It's been a fun week on the economy, right? Pretty wild week of headlines. But you know what's funny? The 10-year note is exactly where it was last Friday morning. I think actually a little bit over 4.3 this morning on the 10-year note. Mortgage rates, everybody says mortgage rates are down. Yesterday, 30-year fixed mortgage closed at 6.56%. Last Friday, 30-year fixed mortgage closed at 6.55%. So, you know, pay attention to real time. And these things move, they don't move. We're in a pretty tight trading pattern with the 10-year note and the mortgage rates. Yes, they are a little bit lower, but they're the same as they were 6 months ago, the same as they were a year ago. So don't let that get you hung up on the economy. We had CPI Tuesday. All the headlines say we had a weak CPI. Well, if you dig into it more, there's a core CPI. That was a little hotter than expected, hotter than the Fed wants to be. Core CPI, Consumer Price Index, was up 3.1%. The Federal Reserve wants that to be about 3%. And the core number just excludes energy. It's more focused on goods and services, things like that. And then we had a PPI yesterday. PPI yesterday was super hot. Not super hot. It was up 0.9%. And that's a Producer Price Index. They call it a wholesale goods number. That is what the business is. But, I was listening to David Zervos the other day, and he says, we haven't seen that the PPI, the wholesale prices are going up. CPI is pretty steady, even maybe a little bit down according to the headline number. Where's that margin going? Somebody's eating that margin, but we're still having good earnings reports to company. Yeah, we're starting to get a little complicated. But David Zervos, he's the chief market strategy. He's actually he's one of the candidates to take over the Fed Reserve when Powell's done next May. Powell's not going anywhere. He's doing a great job. But anyway, David Zervos said these are short-term issues. The Fed funds rate is an overnight lending rate. I've said it a million times. Overnight lending rate between banks and the government. That's the Fed funds target rate. Has very little to do with your 30-year fixed rate mortgage. But the headlines, the media, they want to sell papers. So they become obsessed with let's cut rates. That's a broad number. Let's cut rates. It's like saying I would like a pizza. I don't know, I just made that up. What kind of pizza? What do you want? Or I want to sell my real estate. What kind of real estate? Is real estate a good time to buy? Good time to sell? Well, what are you looking for? Every deal is different. But David Zervos, he's a great guy. I love him, respect him a lot. He says, don't get obsessed with this little last bit of inflationary pressure. Think long term. Look at your deal right today. See how that works. The Fed. The Federal Reserve Bank, they don't like to surprise the markets. They want to keep things steady, and that's their job. And actually, I wrote down Ray Dalio. I always talk about Ray because he's one of the smartest people I ever met and worked with. But I'm going to read this to you. One man's debt is another man's asset. Interest rates have to be high enough for the creditor or the lender to earn a good rate of return without being so high that they're not attractive or that they're too high for the debtor or the borrower. So the interest rates right now, they've got to be high enough to attract investment, but not too high that the borrowers or debtors can't afford the payment on it. So we recently came out of a long time of free money, low interest rates. So it's all perspective there, and that's the issue that the economy is facing right now. But 4.5% on the 10-year note, that's great. It's enough to attract foreign investment into our economy, attract investment, and still low enough to borrow money. You have to be, we are in a borrowing society for some reason. I don't know, everybody wants to borrow and take on debt, but, there's also another side that invests in the United States, and they need to be paid for that investment. So it kind of works. It's just perspective, what we're used to. I just want to touch base real quick. If you could help me out real quick, how do you pick your real estate professional to work with? Realtor, broker, and why? Like I said, dealing with this other agent this week who is a part-time realtor, and I'm not going to ever badmouth anybody. But a part-time agent, he's a manager at a Lifetime Fitness full-time, doesn't really know. I actually had to walk him through a lot of the deals, but this person that is buying this property is having that agent, negotiate against me, who negotiates every day, and it's just interesting. So I had a lot of thinking. How did this person choose this agent to represent them, and is that agent actually representing them to the best of their ability? It is what it is. Maybe they just clicked. Maybe they're boyfriend, girlfriend. I don't know. It's not my business, but I'm curious. Just let me know. Shoot me a message. How do you pick the real estate agent that you want to work with? Is it experience? Is it knowledge? Is it likability? And just things like that. So Anyway, it's kind of like, everybody's got their uncles who sold a house in 1982 who's a real estate expert, and that's great. Every state has their own rules, and it's like diagnosing an illness on WebMD. So, it's just, there's a lot of stuff that happens in real estate behind the scenes, and we do it every day, so give us a shout. Like I always say, we're here to help, educate, facilitate, and advise. Let me know if we can help you. What's the number? 203-733-5877. Thanks for watching. Another day of paperwork. Just wrapping things up. So have a great day. Be smart. Be safe. And we'll talk to you soon. Bye.